Well, I am so excited to show you Focus Capital's newest acquisition, our newest opportunity for investment, Autumn Trace in Kokomo, Indiana. My name is Chad Sheeler. I'm the founder of Focus Capital. And over the next 20 minutes, we're going to spend some time together to go through the deal specifics, go through our business plan, go through the property, and really why we love this deal. You know, we look at a lot of deals every month. We actually looked at over 100 deals this year so far. We've been best and final on several deals this year so far, and we just came very, very close on a few of these. We came within $100,000, $200K of winning the deal, but we just didn't want to compromise investor returns just to do a deal. So for that reason, you know, we're very selective. We're very careful on our underwriting, and we might do 2 to 3 deals a year. That's just our business plan. We know we won't win most deals, but this one here definitely is a winner. We sourced this deal through an established broker relationship that's been deep rooted. We actually sourced 2 deals last year off market through the same broker, and there'll be many more to come in future years possibly. But this one here, we're actually buying directly from the developer directly, been a long time holder. So let's go through this deal. As you feel free to pause or fast forward, whatever you'd like. Then after we're finished, if you still have questions, reach out to me directly, my investment team, and we'd love to talk to you more about this opportunity. So Autumn Trace, Kokomo, Indiana. So 128 unit property, which is great to have on-site payroll, have the attention that we need to the tenants, to the property, to maintain it and operate it very, very well. It's a Class B property. We're acquiring this for $11.3 million, which is $88,000 per unit. The opportunity here is for you to come alongside us as a limited partner investor to earn a great risk-adjusted return on your investment. We're projecting baseline a 16.5% IRR over a 5-year hold period of time. We currently are raising $5.5 million. Over the last few weeks, we've had a lot of interest already. A lot of people are on the portal, registered and committed, and we plan to close July 10th. Minimum investment is $100,000 on this opportunity. We plan to hold for about 5 years. Could be shorter, could be a little bit longer. But the main story here is, you know, why we found this deal is we found this deal from the broker through a seller, and the seller has been a developer already, and they're mission driven. They've kept occupancy very, very high, rents very low, and kept the properties well maintained. As a matter of fact, we walked the property this week actually, and there's no vacancy at all. There's a lot of demand in this area, and we love it because of all the job growth going in. I personally have skin in the game as well. I'll be invested personally over $500,000. Could be as much as $1 million. I put cash in all of my own deals. I believe in them. And many deals, I'm the largest investor personally with cash that has skin in the game. Part of this deal as well, we're actually acquiring also an adjacent parcel of land that's 16 acres. We plan to pursue development on this parcel of land because of all the jobs being created that will need that people will need a place to live at and rent from. So we'll be going through the process, and then that will be part of this whole transaction as well. So every investor will have the opportunity to participate in that project if it comes to fruition. Why we love this deal, man, it's like 5 reasons here. You know, number one is this is also a great risk-adjusted return. It's a lower risk deal than, let's say, a new development deal. It's a great basis. So relative to replacement costs of what it would cost to rebuild this whole community, $88,000 a door is less than half of what it would cost to rebuild it brand new. The rents are so low. They're over $200 a month lower than the comparable properties nearby. So that gives us a great advantage to improve the property, improve the units, and get the property up to market standards of where it should be at. We've got a simple value-add business plan to force appreciation. We're going to be doing some great renovations inside the units. We're going to work with a very experienced company, and that company has aligned interest with us in more ways than one. Going over the returns to this property, as I said, this is going to be a baseline 16.5% IRR to our investors, which over a 5-year hold period of time will net an equity multiple of 1.93. The way the structure is built is that all the LP investors will have a 7% preferred return, followed by a 100% return of their capital first, and then followed by a 70-30 LP-GP split until we get to an 18% IRR. At that point, it will be a 50-50 split thereafter, LP, GP. With our returns, we always beat up our model quite a bit. We're very conservative, we're risk averse. The last 9 deals we've done, we only use fixed rate debt, and our goal is always to outperform. As you'll see in some of our numbers here, especially with the projected rents, there is a lot of room still to grow in these numbers. There's still a lot of room to actually get higher rents that I think we probably will get, but we still want to be very cautious and just assume kind of the worst and have it be conservative. That way we have the longest runway to outperform our business plan, of course, and then all the investors can share in the upside when we do outperform all that. As far as the loan goes, we're working with a local bank. They love the deal. They've been on site already. They love our team. It's a fixed rate deal. I've only done fixed rate deals with banks so far. Like I said, I'm very risk averse, and our soonest loan maturity is 2027. We're in a great spot to not have to make a move at all with our loans. They're not maturing time soon. And then, as I mentioned before, I personally am investing $500,000 of cash in this deal. Our loan terms here will be 24 months interest only. We have a 5-year term. We're going to be at 60% loan to cost, which is a great leverage point to be at. Job growth. So Kokomo, Kokomo is one of these areas to where we love these outer markets outside of Indianapolis. I have a lot of experience in doing these smaller markets because of the job growth going in there. Kokomo is actually set to outpace the rest of Indiana, the cities here, with their job growth. The next couple of years, I saw an article yesterday that showed that they're projecting 5% job growth in this city. And the reason why is they've got a major employer going in here. There's 2 battery plants being built, one right now, one in a couple of years. The first battery plant is set to be producing batteries in Q1 of 2025. That alone will be creating 1,400 jobs in the city of Kokomo, 20% of which will be from international employers. And that's especially important because those type of residents are going to be forced to have to rent. They cannot buy a home. Along that same line there's been very, very little new supply coming into Kokomo. There's been less than 400 units built of rental units in the last 10 years. And there's not many new developments planned going forward either. So we have a great opportunity to capitalize on an already full market of these properties. They're already full today, and we have all these jobs coming in, which will create even more upwards pressure on the rents at these properties too. Kokomo has other great employers such as hospitals, factories, and the whole north part of Indiana, above Indianapolis, is about an hour north. We have a lot of other companies building businesses here. So we have the Leap District in Lebanon, we have Whitestown, and we have a lot of chip manufacturers coming in here, EV plants, battery plants. So it's just a great area for employment growth, which is one of our main metrics we use when we choose a market. Autumn Trace is located in a quieter area of town, southwest part of Kokomo. It's in a residential area with a lot of great homes nearby, a lot of renters. You're just a few minutes away from some intersections for some food establishments, some shopping, some other employers too. Now, a lot of the employers on the northeast side of town, there's about an 11-minute drive from Autumn Trace. So it's a very, very easy drive there for residents to get to work. And you'll notice this property it's a quieter area, which will appeal to a lot of different resident types. When I first saw this property and I drove in there, I thought, man, this is just like a really cool place, very well maintained. And after we finished due diligence a couple weeks ago, we found the same thing. We found that it's been meticulously maintained by the seller, and we fell in love right away. The amenities here at the property are great. It's got a full-size pool there. It's got a playground. It's got carports. There's pets allowed. And then it's got a cool clubhouse. Part of our strategy will be to actually do some renovations on this clubhouse to make it even more appealing. We'll be adding a small fitness room in the clubhouse there towards the back. We'll also be renovating this kitchen there in the clubhouse, and that will be able to show the new residents that are applying for a apartment there exactly when they walk in the door. They're able to see exactly what the apartments look like as far as the kitchen goes. Other amenities we'll be adding as well will be a grilling station and a dog park too. So here's our business plan. We've done it before. We know how this goes. Value add strategy, it's simple. What we'll be doing was called tenant occupied renovations. We'll be going through and updating the kitchens. We'll be replacing the cabinets, the countertops with a 2 centimeter thickness granite, LVP in the wet areas. We'll swap out the lights with LED lighting. We'll do plumbing fixtures and some bathroom vanities as well. And that will give the tenants a new, refreshed place to live, which will really enhance the tenant experience. We're also going to allocate about 2/5 of our renovation budget overall to exterior. So we'll be doing stuff like carports, asphalt parking lot, doing some painting work, some signage work, allocating some money to the HVACs, water heaters, common area hallways. We've got a 5-year capital plan all laid out, broken down year by year, and we have plenty of funds reserved that we're raising for up front to help us maintain the property for a 5-year period of time. On top of that, we also have a contingency clause of 10%, to where we have extra things that may come up. We have funds for that. We will also have plenty of reserves in place for any kind of thing that may come our way. One thing that I want to point out too is part of our business plan is going to be these tenant occupied renovations. Who we're partnering with is very experienced in doing these. They do thousands of units per year at a very large scale. And we've chose this route because this will give us higher scale, lower vacancy loss, and tenants can basically kind of test drive a new car per se and live in a nicer unit until their lease is up. And we're finding that tenants like doing that. They like to feel the new unit, and then when it comes time for renewal, there's a higher probability they will stay in there if they choose to do so. Even though we have still underwrote that we could experience tenants turning over, and we've planned for that if that does happen. 2 of our previous deals we've done have had a full rent roll turnover, so I'm used to doing this. I'm used to changing out tenants, getting new tenants in there, a higher demographic. It's not news to us at all. 2 of our case studies, you can look at the back of this deck here, will show that we've done this before, and it's very, very successful. So over one day, they do 15 of these a week. Over 1 day period of time, the tenant goes to work, they come back home at 5. In that meantime, our company we're working with will go through that same day, and in 1 day, literally, they will replace all these things, have a punch list at 5 p.m. and be out. So in 10 weeks period of time, we will finish the whole property, interior renovations, and let the tenants live in these units, nicer upgraded units, for the rest of their lease term. Part of this deal as well, so it's going to have the vacant land parcel to the south. You can see here in the picture, there's the apartments to the north, the vacant land to the south. It is already zoned commercial, multifamily commercial. We've already been talking to the City of Kokomo Planning Commission. They are open to doing tax incentives with us to get this development off the ground. So in the next few months here, we'll begin the process to look at the feasibility of that land parcel into more multifamily units, and we'll keep you posted on that. So let's touch on the rents, kind of changing gears here. One of the best things I like about the property is that the rents are so low compared to the comparable properties directly around it. The average rents today are $757 per month as an average. You can see on the left side of the screen, Autumn Trace in-place rents, and you can look at the 4 comparable properties: Bradford Run, Westbrook, Amberwood, Cambridge Place. The lowest of those 4 is $920 a month, and these are 4 properties or ones that have no recent renovations at all. This is just comparing classic units versus classic units. But the average is $1,024 a month. So based upon that right there, we have plenty of runway to go without even renovating the units at all. Well, we're going to do more than that. We're going to go through and do some light renovations, as I mentioned before, and we're comparing now that once we're finished with the renovations, we're projecting to be at $1,081 per month as an average rent. We have 3 properties here next to that to the right, which these properties either have renovations already or they are with them right now. The best comp that we have right now is Legends of Wildcat Creek. They're getting $1,454 average rent across their apartment complex for similar size, similar vintage, similar finish, and we're not going to project that high because we're being safe here on this, but the average across the board is $1,305 per month as an average. I feel like we even have more room to move and get higher rents than we think we're going to get. But again, we're being conservative to just forecast, and be safe here on this business plan. So sample investor returns. This will show you if on a sample investment of $100,000, what you can expect to be projected over the next 5 years. On an investment of 100K, you can expect that we're projecting to return 193 over the 5-year period of time. So there's cash flows every quarter. We do the first cash flow distribution will happen the the month following the first full quarter of ownership, so Q4 this year. We did monthly updates via email. And you can see that we plan to return capital in year 3 to the investors. This is not needed for our business plan to work. This is how we do things. We'll force appreciation the first couple of years. We'll increase the value, and then we can redeploy some of the capital back to our investors. So that way you can deploy it somewhere else, and we'll keep cash flowing on the property, and you'll still stay in the deal until it's sold at a maybe year 5 date, what we're projecting here. But overall, it's an 18.5% average annual return, close to a 7% average cash on cash return with a multiple of 1.93. Our team it's all about the team, right? So I've done 9 deals so far. We've done 3 deals full cycle. All of our full cycle deals have been in value add smaller markets. So we're used to doing value add, we're used to doing smaller markets. I know what it's like to do a property where there's not a lot of new development coming in, and we can execute. Building a strong team is what it's all about. You have myself, we have Catherine Azar, our asset management operations person, Chad Olson, our acquisition person, and then we have Jim, our CFO advisory, William, investor relations, Tracy Mendel, our assistant, and of course our advisory panel. That's how I've been able to make great decisions. I've been a big fan of mentors and coaches along the way, linking arms with them. That's how we solve problems and get coaching for our team, Steve, Laura, and Paul. Current portfolio, take a look at that at your leisure. Go through our deck. We've got a great project in the Fishers right now. We're doing development downtown. We have a project in Lafayette and Lebanon we bought last year Atlas in Richmond, Walnut Manor, Kokomo. So this will be actually our second deal in Kokomo we're doing, and I'm a fan of this because our Kokomo deal right now in Walnut Manor is doing very, very well. It is cash flowing. We are getting rents that are above what we thought we'd get from the very beginning. So it's proof of concept there for Kokomo and how it's growing. Check out our case study. We've done 3 deals full cycle so far. The last one here we exited was Wedgewood Commons in Columbus, Indiana, a 20-unit deal, held almost 2 years. We had a 3.03 equity multiple on our capital invested, and that was a great example of finding a well-maintained property from a long-time seller, tertiary market, low average rents, did the business plan, and it worked out beautifully. And then check out properties as well, our Sugar Hill Apartments deal that we acquired, the second one there in our portfolio. So our timeline, we are closing this property July 10th. If you have questions, make sure you get with me, my team. Let's get you registered on the portal. Let's answer your questions that you have. We have always oversubscribed on our previous opportunities we've already rolled out, but we are closing July 10th. Find the link on the website here at focuscapital.com/autumn-trace. You can book a meeting there with me or my team. Register on the website. So look up our information, get with us here, and love to see you on this deal to partner with us. Thank you so much.